Indeed. Presh, just a quick word on oil and gas. Still relatively small, but 356 crores, flat quarter on quarter. Any call over there going forward?
In fact, even that number is better than what I was expecting. My estimate was around 320 crores kind of number. There is a slight beat there, even there. But the thing is, see, now this business eventually currently is only KG-D6, but when the CBM production starts and NEC-25 starts, that time, it will be a material contribution. And the more issues around the E&P is about clearances of the projects and clearance of budgets, the penalties. Those all things are more important rather than these numbers right now for Reliance in terms of the E&P business. So, for us, the refining and petchem itself has a lot of value for Reliance, and especially the petchem business, which will drive substantial value over the next couple of years with new capacities and to low cost off gases capacity. So that is, I think, a value driver for Reliance in the near term.
So before we let you go, Presh, what would be your price target on Reliance? Do you think you'll have to work your numbers a bit now again?
We'll have to rework our estimates a bit, and because especially the kind of beat we have seen on both petchem and refining numbers, we'll have to upgrade our estimates. And secondly, current price target is 950, but possibly that may be revised upwards.
Fair enough, Mr. Tulsian. Would you have a slightly more constructive view on the stock now?
See, now, Anuj, we have been talking of the crude having process. It is 17.7 million. And as I said that I worked it out at 17 million on 109% capacity. That means they have processed 5% more, or maybe, to be precise, maybe 0.4. And if you take 0.4 of that, probably that gives you the extra 150 crore on account of EBIT in the refining segment. So yes, 17.7 is the crude having refined,
Okay.
Because if I go by my estimates, because I've taken the estimate of 5,310 crore as the PAT. I'm not trying to correlate the numbers, but if you really individually take that segment, again, similarly, we have to really now see for the petchem division also that how much quantity has really been processed. Yeah.
Okay, I was just looking at if there's some word on retail. They're maintaining that retail this time around has not done too well because of a couple of reasons. One is gold, because of the gold volatile prices along with import duty and restrictions, and the other is political unrest in Andhra Pradesh or Simanza region of Andhra Pradesh. So that is why the retail business, there is some issue over there, because if you see quarter on quarter, second quarter turnover for retail business is 56 crores, which is actually in line with what they did in Q1, and the EBIT for this quarter for retail is 95 crores for second quarter. So for second quarter in a row, retail business is cash or is EBIT break even, but of course that's not main value for Reliance in some of the part valuation. It's refining and petchem at this point in time. But Mr. Tulsian, just coming back to that question, then is there evidence for you to change your view on the stock or for the stock to break out of the range that it's been over the last 6 months, or not quite yet? See,
Anuj, first we have discussed on refinery. Let me go through quickly on the petchem also. They have, there is a production of 5.7 million ton. So again, there is an increase of about maybe 4 lakh ton, 0.4. So that also, again, if you really see 8% increase on a sequential basis. So again, we just first try to correlate the number. So that also has given, extra, maybe about 150 crore, 150 to 200 crore. So if now coming straight on your question, you have an increase of about 350, 360 crore from the core operations. That is number one. And number two, if you really see the financial income or maybe the treasury income, that is coming down. So definitely this will be seen positive by the market, because if you really take the call on the EPS estimate, probably I will not revise it upwards maybe beyond 68, 69. It is going to remain sub 70 for FY14. But yes, the quality of the earnings shift from treasury income to the core operations, because no one is expecting any improvement in the upstream, oil and gas, because that is going to remain flat till we get this dispute settled with the government and all that. But yes, the petchem and refinery both have contributed, and I am impressed with the quantity increase, because we all know that the capex plan and the capacity capacity increase is very massive by Reliance Industries in the petchem segments, because all their focus, if you see the Mukesh Ambani, in the AGM speech also, he has stressed more on the petchem segments, and definitely they will be very aggressive. They will probably be trying to increase their market share in the domestic market as well. Reduce the import, and will try to market the user. So yes, that is improvement in their core business, which will be seen positive by the market.
You're reading some quotes from Mukesh Ambani, the chairman and managing director of Reliance Industries. Quite clearly, this quarter has to go down as one of the best that they have seen in recent times. And the point Mr. Tulsian is making, I just want to brief our viewers again on what essentially has happened in this quarter. Because of a jump in crude refined, the crude they have refined in this quarter, and the fact that they've had currency depreciation, both these factors put together have compensated for the gross refining margin coming down to $7.7. So that really is the key point if you're looking at the refining business. Petchem business quite clearly has been a bit of a stunner, because they have reported EBIT margin of 10% on petchem, and that performance, that EBIT performance quite clearly has beaten, I think it would have beaten almost everyone's estimates. The other income is actually lower, the treasury profit bit is actually lower, tax is actually higher. So whichever way you look at it, just to reiterate the point, just as we made the point in Q1, just as Q1 looked operationally a bad set of numbers, Q2 is looking operationally a good set of numbers. Devin Choksi is with us, Managing Director of KI Choksi Securities. Devin, hi, good evening. What's your call looking at these numbers? Both on petchem and refining, looks like they have beaten estimates.
Yes, Anuj, good evening. Certainly, I think I was very clear, I think when we talked about this subject, that the petchem margins are likely to be better. Two reasons. One, I think the import duty factor has definitely helped the local prices to improve. At the same time, I think the depreciated currency has resulted in a better price realization for the company. And I think the important aspect about this particular thing is that this is despite of increase in the volume in the petchem segment, which stands, I think, almost stagnant because of, I think, the want of further additional capacities. So to a greater extent, I think the performance on the petchem side, I think, has definitely, I think, come up better, much on the expected line at the same time which we are talking about. At the same time, the EBIT performance for the refining segment is better comparatively. I think largely influenced because of the export-driven refinery that they have, and at the same time the currency depreciation factor which has worked in their favor. So yes, I think a little bit expected, more than expected. We were expecting somewhere around 5,450 crores worth of net profit. Vis-a-vis that, I think the company has produced 5,490 crores. I think better than expected, but yes, I think welcome for sure.
Yeah, Mr.